Episodes in partnership with BPC, a payments processor that builds digital ecosystems which enable seamless payment experiences. I really hope you enjoyed the conversations. Okay, I've been joined by Julian Farley, who is Sales Director UK and Europe at BPC.
Hi, Graham. Good to see you.
Yeah, really good to see you. Well, first of all, thank you very much for partnering with us. We've got some excellent conversations coming up, and yeah, it's all going to be good. But let's just go back a step and talk about Pay360 a moment. So why is this such an important event for you? What are you trying to get out of it?
I think Pay360 is a market-leading event for the UK. What's interesting is there's now more and more European people visiting and seeing what we're doing. And it's a great case to showcase BPC, what we can offer to the market and engage with existing clients who we've already been speaking with today. But engage in new conversations and also get some market direction that banks and fintechs are looking to move into.
Yeah, and as I said, we've got an excellent lineup of guests. We've got people from the likes of Nationwide, from Santander, from First Direct, from Crown Agents Bank, lots of different banks and financial organizations. What are you most excited about hearing from those conversations?
I think the ongoing conversation around transformation. We know for a number of banks, it's a multi-year journey and where they are in that. And the interesting point being that you start a transformation journey that's multiple years, but what you're transforming to is changing during that journey. So today's world, there's lots of conversation about AI, the use of agentic commerce moving forward. And then also something I'll be talking about later is the use of digital wallets and what are they and what do they mean to people. And really just understanding how they see their positions in the market. There's lots of conversations around trust, which comes with AI as well. And are banks still trusted? Or are people looking to, like Revolut is now a bank, but is kind of viewed as a fintech and people trust that. And where do they trust that more than they trust one of our sort of traditional UK banks?
Excellent. Well, let's delve into a few of those topics. Let's start with, as you said, you're speaking here about digital wallets, aren't you? So let's talk about that space to begin with. How do you see that evolving? We're going to be talking about super apps, in Asia. How's it going to pan out within the European marketplace?
I think it's still quite an open decision. Yes, there's great examples of WeChat that has everything. There's lots of conversations from Elon Musk about what X will be and that it will be a super app. He had X Bank many years ago and X seems to be his thing. But my view on it is a digital wallet, if you just focus on the word wallet, is something we're used to putting things into and taking out of.
Absolutely.
And so there's already a lot of trust and a lot of use with technology providers doing that, namely Apple and Google. So is it really a space that banks want to get into, can get into, or is it going to go down the route of a super app where there is such an amazing experience that you spend 80% of your time just in that one app where you can do everything that you'd want to do?
Exactly. And let's move on to AI, agentic AI. I mean, we're going to be focusing a lot on those subjects during these interviews. What challenges still exist for you to bring that into the mainstream, and what does an agentic world even look like?
I think that's a really interesting question. I think a number of people that are here will have been to sessions run by Visa or MasterCard where they presented their different versions of agentic commerce, which is around the simplest example of going on holiday. You know where you want to go, you have to fly there. So those are two known expenses, but what else can you do there? And will agentic commerce give you all of those ideas and let you bundle in a single sort of price to do everything you want to do. But it does bring in a whole element of trust. Are you just going to essentially tell an AI agent what you want to do and let it go off?
Well, absolutely, because there are ideas, some suggestions for what you should do on holiday. Sure, that sounds great, but actually going ahead and assuming that you do want to do those things with or without checking with you, I mean, that's a bit unclear, isn't it?
Yeah, and that's where the element of trust, but also in our world of payments gets complicated, but traditionally, if you pay for a flight, you'll use, in my case, I'll use American Express. If I'm booking a hotel, I might also use Amex because they do good upgrades when you arrive. But pieces in between use credit cards because you get the security and things around that. So if you've actually got an AI agent doing this, can you instruct it to say, I want this part of the journey paid this way. I want to use this payment mechanism for another journey. And do you trust it to do it? I heard an analogy recently that with agentic commerce, the people are comfortable giving an agent a value of up to, say, £50 to spend. And the analogy I was given, and I have no experience from it, is that that's about the amount of trust you put in a 9-year-old child. So it's got quite a long way to go before you're going to let an AI agent go and spend £2,000 on flights to take you to Singapore.
But no, that's a very good point about, the different types of payments, and the different ways of paying as well. You're going to have to draw up some kind of contract with your agent to start with to say, look, these are the ground rules, essentially.
Yeah, and then it does feed back into digital wallets and how that fits. And can you put different limits on a card saying, well, if it is AI and I'm buying a flight, you can spend £1,000. If I'm doing a walking tour in Lithuania, then it's only going to be £20. How do you control and who's going to own the ecosystem that lets you really manage that? And that's possibly an open area around the whole digital wallet space.
Yeah. And just from your time at the event so far here at Pay360, what are you picking up on? What kind of the main talking points do you see? Obviously, your digital wallet session and obviously agentic AI. Anything else that's particularly coming up?
We've had standard visits from people wanting to talk about compliance.
Okay. Yeah.
That's something that never goes away and seems to get more and more complex.
Yeah.
I think the other area is in our ecosystem, we all like to think that we're special, we're the best. But actually, for us to be the best industry, it is really around collaboration. We need partners. You have to accept someone specializing in one particular area may know it slightly better than a generalist. So even as BPC, we provide the whole payments ecosystem. There are times where partners really play an important part, and collaboration in this space is as vital as ever.
Yeah. Now, if we take a kind of broader view across everything that's being discussed here at Pay360, some things we've spoken about, the wallets, digital wallets, agentic AI, real-time payments as well, compliance you've just mentioned. Which of those do you think will have the biggest impact on how we all pay for things over the next 3 to 5 years?
The 3 to 5 years is always that crystal ball moment of what's really going to happen. And I think the answer differs depending on the demographic or age of the person that you're talking to.
Yes.
I think most people are now comfortable using Apple Pay, Google Pay to make payments. But people view even that payment mechanism as different. Younger people consider that as a digital payment.
Yes.
Us older folk think of it's just a card payment that's inside my phone.
Yeah.
And I think there's also, and I actually heard a comment from someone earlier today around payments and payment in cash. And I think in the world that we live in, which is very uncertain, there is a slight move towards using cash, just so that you can really manage your payments.
Yep.
But then if you actually understand how to use your digital banking app or a digital wallet, you can control it an awful lot better than you can even using cash.
Yeah.
So I think the bits that is missing is still an education of people really understanding how things work.
Yeah.
And I think it still comes down. I mean, if you look at payments, it's traditionally debit, which is your own money, where you're getting the option now of pay by bank on the e-commerce sites. There's credit, which is paying with someone else's money and paying it back as and when you can. But there's also crypto.
Yeah.
And I think as we've seen recently, the value of crypto is still fluctuating. Is a polite way of putting it.
Yeah.
So how that then drives stablecoin or a digital euro or a digital pound, it's still an open discussion, and I think payments will still be made differently based on the demographic. I had a conversation with Paul, who I think you're speaking to earlier, speaking to later. He talked about still people writing checks.
Yeah.
But there's like, you look at shock, it's like, who's still even got a checkbook?
Yeah.
So I think for banks and FIs trying to support every mainstream payment, be it cash, be it card, be it check, is a challenge. And also bringing those up into current regulatory rules. I mean, how does a check actually meet current rules around security of data and stuff like that? It'd be nice.
Yeah. Well, listen, we're going to be picking up on all these themes and all these strands during the rest of the conversations. We've got Eugenia Planas from the Bank of England. She'll be talking about the digital pound, so it'll be interesting to get her thoughts on that. But, it's great having BPC partner with us on the podcast again. You were our partners at the event last year, so
thank you for your time and for setting up the meetings that we're having. Thank you.
No problem at all. Julian Farley, thanks for joining me.
Thank you.
Well, delighted to say that Paul Horlock has joined me again on the podcast. We spoke last year, didn't we, Paul? How are you?
Well, I'm very good. How are you?
Yeah, I'm really well. Still Chief Payments Officer at Santander.
Oh, yeah, still there. Still there, absolutely.
Now, you spoke on the session, didn't you, this morning, the keynote about the future of payments. What I'd first like to discuss with you is, I don't know if this was touched upon in the talk, but the national payments vision. Which is all about the future direction, isn't it, of the payments infrastructure. Now, what needs to happen to make that something actually tangible that works for businesses and consumers?
I think it's that making it tangible, practical for customers and consumers and businesses. Look, we've got a vision. Mm-hmm. We don't yet have the strategy on how we're going to go about it. Right. So we're going from this whole mission that was set by the PVDC. Mm-hmm. We've now got a Retail Payments Infrastructure Board, which has now got design authority, but we need some designs, right? Yeah. We need to know where we're going to go in terms of future infrastructure. But actually, it's good to take the time. We've been here before. We've tried to build a view of the blueprint of the ecosystem going forward, and we've got ourselves stuck around procurement. We've got ourselves stuck in a certain individual cul-de-sac going forward. And I think we've got a chance to be pragmatic and practical going forward and let the market develop competitively and organically, really directed at what customers want. And our research that we've done around what customers want is actually quite simple. Customers want security, they want confidence, they want transparency. And that's not all about the technology. It's about how we bring the assets we have available to us today, but also bring new tech to try and drive some of those options forward that give them the confidence they're looking for.
Yeah. Now, if you think about chatting about payments a lot today already now, and then for the man on the street or for myself, payments work very effectively, don't they? We rely on them, and it's not something we think about a lot of the time. They don't often fall down. But what if something did happen? Let's say a global card network went down tomorrow. What would actually happen? Presumably, we'd all struggle to pay for things. But if that did happen, do we need to start thinking about different ways, different rails potentially that we rely on? Or are you confident that we don't need to do that?
Look, we've been there, right? I think I was in Waterloo Station the day that one of the global card networks went down. Yeah. The queues were pretty long, customers trying to get their tickets to go home. And without alternative cards in their pockets, they were pretty stuck. So I think you'll be aware that the Bank of England has particularly raised this issue around potential single point of failure. And they want to see us develop our account-to-account, bank-to-bank capability to provide an alternative, a competitive alternative to cards. There was a great story in the papers probably 2 or 3, 4 weeks back that talked about the banks creating a alternative to Visa and MasterCard.
Yes.
It's not about trying to drive away from those schemes, because cards work brilliantly for our customers. Customers are very well protected, very well served, but we want to build resilience into the system. So what we've built with the bank-to-bank services that sit on top of the faster payments rails gives us alternatives, and the drive to bring that to e-commerce and to point of sale means that we can give customers choices and give real resilience in what we do today. So the ability to pay for your groceries, if you want to, by bank-to-bank rather than card, actually gives you some options around the way you manage your personal liquidity, but also gives you options in terms of if there's any problems. And that's a really good ambition for the bank to bring to the market and for us to grapple with.
So that's kind of almost in place now then, and you would see that as an imperative to bring that fully to market.
It's not in place, but the ask is there.
The ask is there.
So one of the key requirements you'll see in the MPV and also in the conversations from the infrastructure board talks particularly about account-to-account, a point of sale.
Right.
And you'll see some big firms like Amazon, eBay recently have started to move to pay by bank in their e-commerce solutions.
Right.
We haven't yet seen it in full use at point of sale. I think it's coming.
Okay.
Now, as a bank, we would advise our customers the smartest way to pay today is on your credit card, because you get ultimate protection on your credit card. You can manage your position by the hour, by the day, by the week through your banking app. Actually, it gives you everything you need.
Yeah.
But there may be solutions or maybe situations where paying by bank is more advantageous to you, because that gives you what you need in that moment. So we're working with the other institutions on how we do that. And there are, I think you'll see some products coming to market soon that start to play into that space. What we can't do is wait for some big monolithic delivery that's going to take us years to get there. We've got to evolve our way quickly to leverage what we have today to bring those solutions to customers.
Okay, sounds good. Now, we were chatting the other day about online marketplaces, weren't we? And you were sharing some of the scams and the fraud that happens on platforms like Facebook, where people are buying directly from each other, aren't they? So how do we need to think about this from a payments perspective and to make that a more secure way that people can interact with each other and pay for things?
Your point earlier about customers' view, payments just work, right? So they go onto a marketplace, they're going to buy something.
They presume
the last thing in their mind is the payment, because it's just going to work, right? Today, if you make that payment often goes by faster payments. That is disconnected from your trade, if you like. You're going to buy something, you've sent the money, you turn up to buy it, and it doesn't exist. I had a guy do that at my house.
Really?
He was trying to buy a car from someone across the road. As it turns out, the guy across the road wasn't even the guy he thought he was. There was no van. And I said, well, that's terrible. You've just been defrauded. He said, don't worry, my bank will pay me back.
Yes.
Now, that sounds great from a customer point of view. From a banking perspective, it's horrendous.
Yes.
It's cost.
All right. Where?
That's good, bro.
What's up, brother? How you feeling today?
Good. Getting my little coffee intake, so feeling great right now.
I knew there was a reason as to why I had to make a cup of coffee. I don't know what that calling was, but now I know.
Here we go. Let's go.
Cheers, my brother.
Yes, sir. Cheers.
It's up and onwards, if I'm being completely honest.
Yeah. Facts, bro. Facts.
Cheers to a really great start to 2026.
Yeah, right? Yeah, it's been a good start so far. That's real.
I feel like if anybody's listening to this and you are suffering, understand that we are not only, obviously, of course, in this physical environment that's taking shape right now with everything that's happening all over the world and the geopolitical hotspots, the inflation, the escalating prices, just the depreciating prices and risk assets that many of you all probably invested in over the past consecutive couple of years. Just understand that it's not physical, something that we're going through right now. It's also mental. And in order to come out of this, you need to have mental stability. You need to have mental fortitude. You need to be a very strong, superior person mentally, sound, fit, open-minded, not negative, not feeding into this, victim mindset. If you want to come out of what we're going through, not only alive, but obviously, of course, flourishing financially, physically, and mentally. And I encourage you to really do that inner work, that shadow work to, come out on top of what it is that we're going through right now. Because if you don't, it's not just going to be investments. It's not just going to be money. It's not just going to be digital transformation. It's going to be the mindset that doesn't allow you to progress after this era that we're living through. So,
yeah, being positive is key. Super key.
And not just being positive, bro, being resilient, having the ability to bounce back from certain situations. And I brought up that victim mindset. When something happens to you, what happens to you in life is not what makes you who you are. It's how you react to those situations is what makes you who you are. The outcome of certain situations and how you respond to them is what makes you who you are. Something negative happens to you, the same negative thing that could happen to you could happen to me, but how I react to it based off of the shadow work and the inner work that I've done will likely be positive. So the same negative situation that you could go through might actually be a positive for me because of how my mindset comes out of that situation on the other side. And if you're not doing that work right now and what it is that we're going through on a global scale, you better get out now.
Yeah. A lot of people are going to be cooked because they're going to be in that same mindset instead of the mindset that you just explained. And when AI is ramping up in real time right now, robots, AI, it's all getting smarter, more intelligent. I've been reposting the videos all on my feed here on X, but you got robots doing karate, you got robots fucking doing, military shit, you got robots, sewing super tiny strings and thread and like you got to be able to adapt and have a certain mindset to accept that and understand that the times are changing. But I feel like a lot of people are going to fall victim to the victim mindset. Like, oh yeah, that happened to you. Yeah, same here, man. It's some BS. You know what I mean? Like that whole victim mentality type of talk. But yeah, bro.
I mean, look at what happened in COVID. And I mean, we could talk about the AI thing. Like building digital skills right now is an absolute mandatory process that we all have to go through right now. If you're not looking into building digital skills and accelerating in this digital transformation, as a matter of fact, I haven't announced it, but I'm in the process of writing my second book. And in that book, I talk heavily about what I talk about in the CyberX 4.0 content, which is this digital transformation and the acceleration of artificial intelligence and how people can either utilize it to benefit and extend their awareness and extend portions of their critical thinking and be a faster call to action for themselves and turn it into a business model for themselves and all these things, or they can become a slave to AI. And that's exactly what we're living through right now. It's like people aren't really understanding that we are at war. We are going through a massive war right now. And it's not just a physical war, it's mental warfare. And it's been happening, obviously, of course, for some time. It's not like we've ceased the warfare, but it's like people forget what they did to everybody back in 2019, 2020. This is still part of that cyclical digital transformation, this forcing of digital IDs and this movement over to universal basic income and smart cities and artificial intelligence and digital tooling that'll take over the normal way that we used to do and transact finance. It's all part of the problem. It's all part of the problem. So now is the time to really lock in. It's the time to focus. It's the time to fix your mindset. I brought this post up here because people need to see this. It's not a flex. It's not saying that we're better than anybody because we don't. We really are truly here to just motivate people to become better versions of themselves. And what you do with that information is completely up to you. But now is that time where if you're listening and you feel like you're suffering, you're at a low point in your life, or maybe you're not and you're at a high, but you feel like you could take it further. This is your call to action to really do the inner work, to prepare yourself for what's coming. Like Aqua said, he brought up AI, what robotics are going to be capable of over the coming years. Shit, honestly, over the coming months. But nobody has a crystal ball. Learning how to navigate these markets successfully and not just being some, uneducated retail investor is mandatory at this point. You don't understand liquidity conditions. You don't understand central banks positioning. You don't understand monetary policy. You don't understand labor market, inflationary data, geopolitical tensions, tariff related escalations, all these things that these financial institutions talk about that move market sentiment and sway risk on, risk off sentiment, all these things. You got to level up next year. You got to level up. These things matter. These things matter for portfolio allocation. These things matter for sentiment. These things matter for bull and bear markets. It's not this market where back in the early days of crypto, you could just put money in and see 10x, 100x, 200x, 300x, 1000x. It's going to be much more competitive. We're heading into an environment where people that take advantage of agentic AI to manage portfolios, that know how to prompt AI properly to pay attention to these fundamentals and manage and balance their portfolios properly for them, are going to supersede and blow people out of the water that don't. You have to ask your question, are you going to be a part of the person or the group of people that learn how to do those things, that use AI as an extension of themselves to become more profitable, to make more money, to accelerate in this digital transformation, or become a slave to it?
And I would even say, just to put the cherry on top of what you just said, it's like when you come into crypto, your mindset, gets into this lottery mindset, like, oh, I just need to hold 10,000 of these tokens and just wait, and I'll be rich, right? I'm gonna be able to retire. And although that could possibly happen, I'm not saying it's not possible, but what if it doesn't? What's your backup plan? What's plan B, right? So having two different plans or three different plans to get to your ultimate goal, I feel like is the best way, So
I couldn't agree more. There's that one video that we shared that one time. I don't remember from what gentleman or what institution he stemmed from. It was a couple of podcasts ago, but he specifically said that in order to be successful as an investor in crypto, you need to understand market cycles and how to rebalance your portfolio. Do you remember that, bro? You remember that video where he was talking about rebalancing, how institutions rebalance their portfolios on a quarterly basis?
mhm,
And here you
mhm.
have, or the average retail investor just thinks buy and hodl is the strategy. Imagine if you learned about market cycles, you learned about market sentiment, and you were successfully able to position yourself in and out of the market strategically, because you understood the fundamental landscape, you understood liquidity conditions, risk off and risk on sentiment. Just like these financial institutions, you'd likely be a little bit more favorable in your portfolio, albeit everything's down right now across the board. But still, nonetheless, you'd learn how to position yourself in stable coins in times like this, earning yield, accumulating more and more of a cash position to buy dips like this, you know? So that way, when we come out of events like this, you're positioned with more block space. You're positioned with more altcoins, whether it's through DeFi positioning or trading positioning, so on and so forth. This, I'm just going to download a wallet, put some assets into it, forget about it, and hope that I become successful mindset. It's weak. It's lazy.
Yeah. It's highly stressful too, if you think about it, because that same person is not educated on what's really going on. So their mindset can be easily swayed with all the FUD that might be, spread online on the internet, X, YouTube. And when you do the work, you put in the elbow grease, you have a better understanding of what's going on, why the markets are down, why the markets are up, or why the markets are doing whatever the hell they're doing when you're tapped in and you really understand that, as opposed to just letting a bunch of moon boy YouTube channels kind of dictate your mindset and how you feel ultimately, um, to the whole space, which is just it's a lethal thing to do in this time right now. I feel like tapping into the folks that really know what they're doing and have the proof that they can do what they do, right? Um, and the credentials and resume. You could just go down the timeline on Cypress's videos, and this man is like a 95, 97% accuracy rate on calling what the markets are about to do. And now's the time to get with the truth and not bullshit lies that's out there.
I wonder how much longer. This is the last thing I'll say on this spiel before I go over this post, and then we'll transition and play a video clip from the dude from Coin Fund. But I wonder how much longer it's really going to take for people to wake up in crypto, to realize that there's certain people in this space that are just, they're not beneficial. It's disgusting what exists still in crypto. This ideological theory driven mindset that's swarming, or at least swarmed. I don't really know. I don't pay attention to it anymore since the pullback happened, but definitely swarmed the retail space last year of all these people saying that all these things were going to happen with prices at the end of the year in 2025 and at the beginning of 2026. And now here we are, and the market's lost over $2 trillion of value, and none of that stuff is coming to fruition. Who's still winning? That's what you have to ask yourself. Who in the market environment in which we're operating in now is still making money? Who's still operating successfully? Who's still managing portfolios successfully? Who's still not only managing portfolios successfully themselves, but helping others build portfolios successfully and win in these markets? And I can stand on the fact that here at CyberX, it's not only myself winning, it is many other people. Not everybody, because that would be unrealistic, but many others passing challenges, learning digital skills like day trading successfully, building real value by understanding that we are the assets, you guys and gals. We are the assets. I cannot say that enough. Your ability to believe in yourself, your resilience in yourself to succeed through cycles like this, through digital, mental, and physical warfare, is what makes you successful. You are the asset, right? I cannot stress that enough.
Yeah, I wholeheartedly agree, bro. And the ones that are making cash flow in times like this, especially in crypto, man.
Cash flow is king right now, man. Cash flow is king. I posted this post the other day because this was the interview. If you guys haven't watched it and you're listening to this live, I encourage you guys to go watch this. This is just a little tiny brief interview with the private community that we had the other day, because Aqua and a couple of other members have passed recently funded challenges where now, there's multiple 6-figure, in some cases even 7-figure traders in our community. And, I said here, now is the time to study with intention, build skills, because once it clicks, like I said, you become the asset lifetime. You don't need some crypto. You don't need some trading pair. You don't need some investment. You are the asset. And when you understand how powerful that is within itself, you take that and you go off of that, and you are forever successful off of that alone.
Yeah. Now it doesn't matter what life does to you. You could, with a trading skill set, you can get yourself out of any situation. I feel like it doesn't matter.
So I encourage you guys to take action. The first portion of this was a little bit motivational, which I wasn't expecting, but I'm glad that we opened it this way. Shout out to the CyberX research team. Shout out to the CyberX community. Killing it this year so far. Like Q1, bro, honest to God, we had over 25 people become fully funded 6-figure traders. Timestamps are in the community. I've posted them all, so you know that we're not capping or trying to flex. I'm just here to try to motivate you guys listening, to get you to see that we're normal people. We're not some advanced community that you can't tap into or that you can't understand, or it's not that we know more information and you can't have access to this information or none of that. No, that's all garbage stuff that exists on the internet to try to get you to feel like there's competition that you can't participate in. Whereas this community lets you see that we're all equal. And if you put in the work comparatively to other people that are also putting in the work, you can come out on top. You can. You just need that self-work. You need that inner work, that shadow work, to believe in yourself and understand that you are the asset. Eric, Crypto Walls in our community passed the funded challenge just yesterday. Jordan, who I had the opportunity to meet last year in October at the CyberX Link Up, passed the challenge yesterday.
Wait, Eric passed? Yo,
Yeah.
Shout out to Eric, bro. I didn't see that yesterday.
Yeah, Eric passed. And then obviously, of course, yourself, bro, just became a fully funded trader again for the second time after taking payouts, adding more capital to your overall arsenal,
Yeah, bro. Which only 1 to 5% of people can even pass a combine. So I feel like me being able to pass a couple and other members in our community and more than a handful, you're talking a few handfuls, a couple handfuls of people who are able to pass these challenges, I feel like speaks loudly to type of information is on the inside of CyberX, right? You know what I mean? It's not some gimmick bullshit where people are saying, "Oh, the way they make their money is off of, charging people money to teach them," and it's like, nah, bro. There's one of
No.
those communities that's the complete opposite of that, bro. Like,
Actually, as a matter of fact, the amount of money that CyberX makes is less than the amount of money that it costs to run the institutional software that we charge people for in our community. How crazy is that?
yeah, yeah,
Yeah. Yeah. Like our institutional software costs anywhere between 8 to 10 grand a month just to access the data feed to get the info that we need to pool the info for our dark pools and deltas. And we ain't making that much per month and signups and all that stuff. So how do we continue to fund that to give that access to our community members? We make money trading and pay it that way. Like it's so
Yeah.
simple. It's crazy. And it's truly wild what you just said, going back to the statistics that only 1 to 5% of people can even pass a funded challenge, and 1% of people that actually pass funded challenges can pull money from the market. And you would think that a community like ours would have thousands of people in it. We have a couple hundred, don't mind you, and the people that are in our community are very like religious for CyberX. They'd back us to the freaking wall and back, because a lot of our members have been with us for 3-4+ years.
Mhm.
Once
Mhm.
most people come in, they don't leave, usually most of the time. But you would think, the proof that I share on the internet, where it's no hopium, no hype, it's just straight normal people taking it to the next level. Look at this. March 20th, Christina passed a challenge. Brandon, look at the dates. Freaking March 27th, passed the challenge. You would think people would flood in and want more access to real shit like this. But
Yeah.
that is the farthest thing from the truth, bro. It's like
Yeah.
nobody wants this.
I'll be real with you. I think we need to just change our approach. We need to go and buy Lamborghinis, chains, go buy a big mansion, and start doing content.
I literally
with
said I literally I said that. I literally said that, bro, today. I said, "You know what, dude? The algorithm is so jacked that instead of putting out real accurate information, instead of putting out accuracy all the time, week after week after week after week, I should just go buy a Lamborghini. I could go fucking buy a Lamborghini today cash and just start flexing that shit, and then maybe people would realize. I don't know. It's so crazy. It's like this
Yeah.
wild war that's happening. Like, bro, you could just go down my timeline. Look at this. Grow your vibes. Pass the challenge. Look at this.
Yeah.
Congratulations. Look at this. Hold on. It keeps going. D'Angelo, pass the challenge. This is
Yeah.
I've shown you over 6 people now in this call alone. Who we have? Another one. Grow your vibes, making Osmondus. Bro, you've changed my life. First with your YouTube knowledge. This knowledge is so crazy that you share. I'm angry for myself for not having started sooner. You would think people would read this and be like super motivated to change it. Look, Lee CUK passed a challenge. This is crazy stuff. You would think, man. But
All
no.
using the same edge, the same strategy. When we get in our Zoom calls after the trading session, a majority of us are all, we were riding the same wave, caught the same moves, because it's the same edge, and I feel like we're in one of those catch-22s though, bro, because it's like if we do go get Lamborghinis and chains and mansions and all that shit, then they're gonna be like, oh, they make their money off of charging people to come into their group. It's just like, bro.
I'm a minimalistic guy, if I'm being completely honest. I don't really care for any of that stuff. I've been there, done that. I bought a nice car one time in the early stages of my trading career. Honestly, just got tired of getting speeding tickets and I got rid of it,
Yeah.
So I'm just, and I know that the people in our community, bro, they see the realness and that's why they stay for such a long time. And so at the end of the day, I'd rather have quality over quantity, and that's what we have. So I'm grateful for that. But I guess it just really truly hurts my soul as someone who really built his career off of trying to help other people. Like that's literally what I wake up in the morning every day. I smile and I'm like, you know what? Who am I going to help improve today? Because it's never myself. I spend 90% of my day motivating other people. 90% of my time motivating other people. All my time is literally spent with the community, one-on-ones, private Zoom calls, all day, every day.
Shit, mentoring me as well. Shit. Yeah, bro.
And it's so crazy, man, how saturated this space is. So many more people would be successful if they just took it upon themselves to block out the noise, get rid of all the bullshit from their feed, and tap into just some realness.
Yeah.
What's there to lose at the end of the day? Because clearly, I could say this with confidence. What you're probably paying attention to right now is not working for you, clear as day. It's not.
Yeah. Yeah.
So what's there to lose?
Yeah. Bro, I remember when I first came into crypto, I would listen to so many different XRP influencer channels. And I ain't gonna lie, bro, like I thought listening to that stuff was like putting in the work. But I feel like on some level, when you first come in, you kind of are kind of just getting the gist of things. But then after a while, and especially coming across like, one of our lives or a CyberX YouTube video where there's some real research, real game inside that video, I was like, yo, I started gravitating towards CyberX and this whole crew, you know what I mean? And once you see it, it's like, damn, all that other stuff is it's distractions. It's garbage. They're there to make money off of clicks and views, and they're not giving anything back to the people ultimately, except for a new revamped opinion that gets revamped, every 2 weeks. And, no shade on anybody out there, but like if somebody's not giving you game and they're just giving you an opinion all the time, you should reevaluate if that channel is good for your mind, good for your soul, and good for you in this space. So yeah, that's what I have to say about that.
Yeah, I mean, the goal, why we talk about this to the private community all the time, the goal is to last longer than the competitors. And eventually, people that take this crypto and investing thing serious, they will wake up, because eventually they will realize like, oh shit, I can't just be here. If I want to actually make money, I can't just be speculating and just hope anymore. Like hope only gets you so far. And then what takes you past hope is real skills. And there comes a time in your career where eventually you wake up, everybody has to, and you're either going to keep falling victim to this hopium mentality or be like, damn, I actually need to build some real skills and develop an understanding of how these markets move and situate myself with a community that actually knows what the fuck they're talking about. And when you have that realization, CyberX will be here for you. Right?
Yo, it's shout out to Midwest Blue Collar in the comments. This person said, I replaced YouTube hype with Wealth 28 videos, Discord info, and kids at work, and it's changing the way I think.
Yeah.
Bro, I feel like that's one of the best things that you could have done for your crypto career. 100%.
As a matter of fact, he just came into our community a couple weeks ago or days ago because he asked us the question on the live to check out a scam that's happening, that's fluctuating right now across the XRP army right now.
Oh my God, that Fortis bullshit.
Yeah, and we checked it out, and he was like, yo, this is dope that you guys took the time to like warn people about this, and then, jumped in private Zoom calls with us and shit, and now you can see that he's benefiting. Look at this. This is the last example. Our institutional software that we've built that we talk about so frequently, I can say hands down that on the internet, no retail community on the face of the internet has access to this information. A gentleman that has over 13 years of hedge fund experience took over 4 years to build this software, and it highlights institutional deltas and dark pools that exist in any asset class that our community members want access to inside our community. Look at this. This is a post from March 17th, 2026, where I highlighted $1.27 on XRP as an area of interest where price could pull back into, because our software highlighted that there was a buy dark pool at $1.27, right? Dates and timestamps don't lie. So then if you go back and now you go to the most recent post, look at this, bro. Look at this accuracy. You cannot make this shit up. It literally dropped straight down into $1.27 yesterday.
And that's not the first time, bro. Those things are so accurate. They've been like that since last year, hitting, this year, hitting. Nothing has changed with these levels.
Do you know how many people are in the XRP community? I've been an XRP investor, by the way, mind you, again, because I talk a lot of shade about the XRP army, but I've been an XRP holder. It's my biggest bag since 2016. It'll probably stay my biggest bag because I bought most of my XRP sub 11 cents. So it's, of course, my biggest bag because buying sub 11 cents and considering where the price is still at today, I'm in a lot of profit, right? But like you would think that how thirsty the XRP community is to make money and like have like price appreciation and accuracy. Like, dude, they would flock to this type of information. Fuck no. All I get on the internet is a bunch of people like, oh, you fucking fuck.
You're wrong. XRP will be $750 by June.
Oh my God, dude. It just cracks me up because week after week after week, what people don't understand on the outside is that from the behind the scenes, I can actually see our institutional software. And on the order flow, every single time that some bullish announcement comes out about XRP or somebody on the internet with some influencer hype makes some price prediction, on the back end, what we and our team can see is we can see the order flow. So every single time everybody thinks that XRP's price is going to pump, we can see buy volume and sell volume, and we can see buyers getting trapped, and we can see sellers gaining the upper hand, and we can see buy walls, and we can see sell walls, and we can see that it's all bullshit.
Yeah. If people only knew, I'd be like, man, XRP's up 10%. We're about to go. It's about to blow. And it's like, if you only knew the delta that's about to tap right now.
If you only knew that if it doesn't break this dark pool and if buyers get trapped at it, it's going to go back down.
Yeah, bro.
Shit, your bag would be a lot bigger, you know? Crazy. And you know what's even crazier? I'm super excited to run up the bag again in April because I made, a significant amount of money day trading XRP in February and the whole entire time. As a matter of fact, I showed the entire community how on Fulcrum Finance, I went from the top. So there was 5,616 traders on Fulcrum Finance. And in February, I showed people in our community how I went from number 5,019 on Fulcrum, and I jumped all the way up to the top 150 day traders on Fulcrum Finance.
Yeah, you did. That's no cap, bro. That's no cap. And you probably were on that platform less time than a majority of those 5,400 people that are trading on there.
I was only on it for a month. I mean, I'm still on it, but
Yeah. Could you imagine if you would have traded XRP all month last month on there too, bro? Like, damn, that you probably would be top 5, top 10. Like I told you, you're about to be.
I plan to be in the top 50 this month for sure. Top 50 day traders. The only thing is that the P&L of the top 100 traders is substantially higher than my current portfolio balance. So to get into the top 100, it's definitely going to be extremely competitive. This is where the real competition starts. Yeah. But I mean, it still says a lot that out of 5,616 traders, and showing everybody in our community week after week after week, literally, honestly, too. And all I do is what's crazy is I just look for delta setups, bro, and take buy and sell positions from the dark pools in our community. That's all I did in February on XRP.
Damn.
I would set an alert. I would set an alarm at a dark pool.
Yeah.
If it was a sell dark pool, I'd set an alert. I'd go in during New York session. If price was at a sell dark pool and it was rejecting it, and I saw bearish structure, boom, take a sell position. Done. Down to the next dark
easy.
Pool. It's too easy, bro.
Yeah, I'm gonna do that same shit then, bro. What?
You trade Bitcoin, bro. Tap into the Bitcoin dark pools, and literally you're just patient because you got to remember, you got to understand that crypto moves so much slower than like NASDAQ or something because the liquidity is just so much smaller, thinner.
Yeah, I've been in a Bitcoin trade since last night. I took a short last night, and I'm still in it. I'm in a good amount of profit too right now, but bro, I'm gonna implement that game.
Let me pull up this. If you're patient, bro, and you just set on your trading view, you just set alerts and alarms on the deltas in the dark pools, and you only take trades from those specific levels. So like stay on the higher time frame, and when price comes into those levels, then jump down to the lower time frame and look for intraday scalps. Dude, the accuracy is nuts. Where's the XRP channel at? Here it is right here. Yeah, look at the fucking deltas, bro. It's too clean.
Yeah, way too clean.
You know, you're literally just
Look
taking
at that. Just for all the XRP holders too that are watching this right now, just look at that. Look at that 91 cent level. Like that could be a possibility for XRP, guys. Just saying, like depending on where the market sentiment goes, that could be possible. Some people will lose their minds if we see XRP below $1 again, bro. Jesus.
Excuse me. Yeah, they will. I mean, dude, look at the freaking deltas on the scalp deltas on Bitcoin are nice too. You know, these are perfect as well. It's like just setting alerts and alarms. And I mean, as a dollar cost averager too, these levels are so beneficial because remember, as a dollar cost averager, your goal is to what? It's to mitigate risk in your portfolio and maximize upside reward. And so if you are a dollar cost averager and that's all you do, you're just the type of person that has the hodl mindset and you don't have time to day trade and you don't have time to learn about trading, which I get. You know, some people are very busy in their personal lives. I'm not knocking that by any means. But wouldn't you like to know where institutions are positioning themselves in the market so that way you can trade or invest in tandem with that liquidity? Instead of just waking up every day and dollar cost averaging in random spots, wouldn't you like to dollar cost average into the market where it's going to give you the best risk to reward and the best bang for your buck? Well, you can use the deltas and the dark pools for that. You just set alerts and alarms and wait for price to come into them and then buy from those levels only.
Yeah, you can literally put buy orders in too on certain protocols so that it purchases it for you right at that price point. So if
Right
you're
at the
sleeping
dark.
or whatever, you'll get that. So
Anyways, all right, let's get off the institutional softwares that we have because I don't really like fucking seeming like we're bragging and boasting. But if you guys are interested, you know, tap in, you know, try it out for a month. I encourage you guys. Go into the Discord, try it out for a month. You can always cancel your subscription if it doesn't suit you or benefit you. I guarantee you won't even get through all the information in our Discord in a month. So, you know, there's way too much info and value in it for you to even get through it in a month. The freaking crypto research section alone is literally the research that everybody wants in this ecosystem but can never find. There's some shit in this crypto research section in our Discord that I'm like, how the heck did the researchers even find them? All the documents from these large scale institutions, all the panel discussions that everybody like wants to watch that they take clips from and put them on social media, they have all that's in this Discord. So you know, go check it out. And then on top of that, you know, we got weekly Zoom calls. Aqua does his DeFi calls. I do trade breakdowns every single day. It's just such a lively community to be a part of. Give it a try. Again, it's only going to benefit you guys in the long term to be a part of an educated based community like this with no hopium and no hype inside. All right. All right, moving on. So this is what I wanted to share with you guys today. I know we went on a tangent just then, but this dude right here, Franklin Templeton buys Coin Fund spinoff. This is what I wanted to share with you guys first today because some of the things that this gentleman here said absolutely came across like super duper bullish. And look at this, 12 views. So many more people should be tapping into this type of information. But it says here, and shout out to Coinage for this interview, of course. It says Franklin Templeton's new head of Franklin Crypto, Chris Perkins, breaks down why one of the world's largest asset managers is acquiring a crypto fund and what it signals for the future of institutional adoption. So before we get into listening to some of the clips, I have about 4 clips that this gentleman, Chris Perkins, mentioned. I want to dive into just 2 recent highlights that I had posted over on X that go hand in hand with what Chris Perkins is about to say to you guys. Where I said here in this post, this isn't about hype anymore. And of course, Aqua, if you have any commentary, you're more than welcome to jump in while I'm going through this rabbit hole. I said, we are witnessing the building of the foundation for institutional scale. Institutions will flood into crypto. It's only a matter of time. And this unblocked blockchain regulation is no longer about permission. It's about sequencing that was posted today on LinkedIn, came out. And they just talk about the recent developments that have happened in the crypto ecosystem this year alone. So just reading some of those highlights to give you a perspective of why I'm saying this in this post, that this is not about hype anymore and that we are witnessing the building of the foundation for institutional scaling of crypto. Here it says, recent CMA rules in the UAE illustrate this progression by formalizing federal licensing defining permitted and prohibited asset categories and introducing structured trading and listing frameworks, where regulators are not just expanding access to crypto, they are shaping the market architecture. This signals a shift toward layer infrastructure, where operational and supervisory sophistication becomes central to adoption. Then here it says Dubai's recent move on virtual asset derivatives illustrates this shift as well. It signals that this conversion is moving from who can operate to what kind of market can be built, and how all of this will attract institutional capital. It says this evolution is meaningful because derivative frameworks typically emerge only once regulators are confident that market surveillance, custody, collateral, conduct standards, and operational resilience can support more complex instruments. In that sense, this framework is not merely permissive, it indicates readiness for the next layer of market sophistication. Together, these steps reflect a broader trend in the UAE. That regulatory activation is no longer about proving openness to innovation. The emphasis has shifted to an infrastructure density, deeper product sets, and clear pathways for institutional participation, showing that a market now defines itself by its ability to support a full financial stack rather than by access alone. While regulatory headlines often dominate attention, this one was a crazy announcement. It says a more strategically important signal comes from market infrastructure. SWIFT has moved from design into the build phase of a blockchain-based shared ledger for tokenized deposits, with a minimum viable product expected to support interoperability between banks for 24/7 cross-border payments and live transactions targeted in 2026, which is just crazy to see. Because how many times over the years have crypto bros been like, oh, Swift's going to get replaced and Swift's going to use this chain and that chain? But in reality, they were never going to get replaced. They were way too big for that to ever take place. And anybody that argues that case honestly just shows lack of education on the actual understanding of how finance and traditional finance works. And it was never going to get replaced. It was always going to merge with DeFi. And that's exactly what's happening. Now, will Swift adopt certain blockchains? That's up for debate. I'm not here to debate that. I hope that they do to some extent, to some degree. But nonetheless, the fact that it is now providing interoperability with its own viable products to offer interoperability between banks and 24/7 cross-border payments is pretty crazy to see in real time. It says institutional participation is also entering a more advanced phase. And this is where it mentions this Franklin Templeton acquisition. It says Franklin Templeton's acquisition of majority stake in crypto native investment specialist 250 Digital sounds like traditional asset managers are evolving beyond limited exposure products into specialized digital asset capabilities. This shift from access to capability is a clear indicator that the market's next frontier is operational sophistication rather than headline approvals. Last but not least, here's the official announcement right here. So you can see April 1st, 2026, Franklin Templeton, a global investment leader, today announced a plan to acquire 250 Digital, an active cryptocurrency investment management firm led by financial industry veterans Christopher Perkins and Seth Gins of Coin Fund Management. And I said, these are not retail investors chasing altcoins. In case you missed the headline this week, via all the bearish news and noise, institutional money is positioning itself to buy the dip. This is a freaking really crazy bullish headline. Of course, there's been no bullish price action considering we're in a risk-off environment, but this just goes to show that institutions are about to take investing and adopting crypto very, very freaking serious. It says here, Franklin Crypto, which is the new crypto leg now of Franklin Templeton, Franklin Crypto will expand Franklin Templeton's existing suite of crypto and blockchain VC investment offerings and will broaden the firm's digital asset investment management platform. This is an exciting addition for Franklin Templeton, and we're pleased to welcome Chris Seth and the 250 Digital team to our firm, said Jenny Johnson, CEO of Franklin Templeton. Together, their investment talent and differentiated strategies strengthen our capabilities in digital assets and positioning us among a small group of global asset managers with dedicated institutional-grade crypto investment management teams, enhancing our ability to serve clients worldwide. Crypto's institutional moment has arrived, and Franklin Crypto will help our global clients navigate this complex and rapidly evolving asset class by delivering expertise, knowledge, and digital asset products that meet their sophisticated investment needs, said Perkins. So let's listen after this massive announcement that we got this past week. Let's listen to Chris Perkins and kind of what he has to say about this announcement in this Coinage interview that he was on just the other day. So first, we're going to play at about 2 minutes and 3 seconds. Listen to what this gentleman has to say, and then Aqua, I want to have your opinion on this as we go through these talk tracks.
For clients, it's a really, really interesting time right now. As you said, this is the institutional era, and so you're talking about all the challenges right now on macro. Despite these near-term challenges, this industry is maturing so fast, and for many institutions, they have risk now, not for being in the markets. They have risk for not having a crypto strategy. And so our job is to leverage, the deep native expertise that we have to really help our clients on their journey with just scalable institutional products. I can't be happier to be part when the deal closes of the Franklin team. We're bringing across our liquid research analysts, our traders. It's going to be awesome. We just got off the phone with the team, and everyone's incredibly pumped up, as you can imagine.
So take into consideration from a retail perspective what this dude just said, right? That it would actually be more of a risk for institutions right now not to have a crypto strategy, and how he just got off the phone with the Franklin Templeton team and everybody's pumped up. Y'all, look at the market. Look at the market right now. The market is effed right now.
Discount, bro.
And you got a dude who's working behind the scenes with institutions talking about they're pumped up. That should motivate the shit out of you guys to start focusing on utility, locking in with projects that are building, locking in with projects that have compliance and privacy baked in, because you know that these are all things that these institutions are going to need in order to adopt these digital assets. And again, not financial advice. I know what I'm doing.
Yeah. And if you guys are excited, then I'm super excited because you guys are excited.
So that was the first thing that I just came across to me is, wow, the fact that he said that, considering the market environment that we're in. And he even said this temporary environment that we're in, right? He mentioned the risky environment that we're in right now and said, we're on the phone and everybody's pumped up.
Yeah, bro. That's all I need to hear, to be honest with you. If you guys are all pumped, I'm pumped. I've been pumped, but the fact that you guys are pumped behind closed doors on where this is all going is just, verifies why I'm pumped,
Next, he talks about how crypto adoption will accelerate significantly. Take a second and listen.
Able to do is to deliver those enterprise ready, robustly risk managed compliant solutions that ultimately allows us to scale. This is right now, this is a very small industry. It's between a $2 and $3 trillion industry, crypto. I think that's going to accelerate materially and exponentially in the coming years as we tokenize the $127 trillion equity market, right? How are we going to pay for those on the weekends with stable coins? And you're going to see this massive convergence between equities, fixed income, crypto. It's going to blend all together. The solutions that our clients are going to demand are going to be completely blended as well. And so this gives us the opportunity to really lean in and be a leading active manager for all those institutional clients around the globe. And the other thing is, like, crypto is 100% global from day one. It's the true global asset class. And we're going to be able to leverage that global footprint to deliver those products for our clients. I can't wait.
Bro, 127 trillion, he just said.
Yeah. I honestly think, and the numbers and the statistics show, there was this document that I read. Now, it only touched on the statistics from, I believe the jurisdiction was Switzerland, which is obviously, of course, one of the most crypto native jurisdictions on the face of this planet. And the numbers, bro, were completely decimated from beginning of the year 2025 compared to active retail participation now. And it was just comparing retail participation and interest and how it's literally hit an all-time low. And then it versed it against institutional participation and interest. And institutional participation and interest is literally right now at an all-time high, where every sophisticated institutional investor, asset manager, family office, hedge fund has a dedicated team to figuring out how to embed crypto into its core infrastructure, versus retail traders have capitulated, bro. Most retail traders that don't have a firm understanding that we're just here off the speculative hype and to get rich quick mindset have completely capitulated. And the ones who are left are people like yourselves listening into this call likely right now that have an actual understanding of where this technology is headed and the utility behind it, and how eventually it will merge with TradFi and we will see these numbers that this dude is talking about, which is trillions. And I think that when that happens, we really truly as retail traders have to understand that we are never, I repeat, never, ever, ever going to get the opportunity to dollar cost average into the crypto ecosystem below $2.5 trillion ever again when these institutional floodgates come in. Like if that has not clicked, it needs to click right now, because when these markets go 5, 7, $10 trillion, which eventually over time will happen. It's not going to be an overnight thing, flip of the switch, bullcrap that everybody made you believe. It will gradually get there. But even if we went to, let's just say, $10 trillion again, and look at the last two massive bear market pullbacks that we've experienced, one 2021 to 2022, the market lost $2.3 trillion. From October till now, the market has lost again $2.2 to $2.3 trillion. So if we go to $10 trillion market cap and we lose another $2 trillion, that the pullback is not going to be, it's going to go from 10 trillion back down to 8 trillion or 7 trillion. It's never coming back down to $2 trillion.
Never, bro. Never. Never. There's a once in a lifetime window of opportunity. For real, bro.
So great note on that, Mark, the number that he just threw out there. All right, next. I have two more clips from this and then we'll roll over to Canton. 4 minutes and 48 seconds.
You mentioned Clarity Act. Clarity Act, I think, is going to get done. And yes, we're navigating the final issues around yield, which kind of are ridiculous if you ask me. It's going to get sorted. And then as we approach midterms, I do think there's going to be sufficient political pressure to get this thing done. That, in my mind, is going to unleash institutional animal spirits, if there are such a thing. Obviously, retail animal spirits are a little bit different, but that really that pushes this reputational risk.
Hey, yo, did he just say unlock institutional animal spirits, bro?
Yes, bro. Yes, bro.
Let's run that
back, bro. Run that shit back, bro.
Clarity Act. Clarity Act, I think, is going to get done. And yes, we're navigating the final issues around yield, which kind of are ridiculous if you ask me. It's going to get sorted. And then as we approach midterms, I do think there's going to be sufficient political pressure to get this thing done. That, in my mind, is going to unleash institutional animal spirits, if there are such a thing. Obviously, retail animal spirits are a little bit different, but that really that pushes this reputational risk over the finish line. There's no more, like, that's it. Now we have codified, enshrined laws, which is going to be very, very beneficial. And it's going to accelerate institutional adoption. What does that mean? Honestly, the line between crypto and TradFi is going to go away. I almost think of it akin to back when I was in futures and we went from pit trading to electronic trading. And overnight, for example, Bunds migrated from like Life to Eurex overnight. That was it. Mm-hmm. You're going to see the same thing happen with tokenization. And when I think about tokenization, it's not only just tokenizing real world assets, equities, bonds, but it's tokenizing technology. And those are the crypto native assets that we're seeing. You're going to see true 24/7 markets. How can you be a fiduciary in this space if you're not running and operating 24/7 markets? That's what the crypto discipline brings. We've been doing that for years in the crypto native space. That is a very transferable skill as 24/7 markets take hold. And so from a product perspective, what are people looking for? They're looking for blended portfolio.
That was a phenomenal talk track, which just goes back to what I said about the whole Swift thing. And like these intermediaries and traditional financial players, this concept of them being replaced is so outdated. Instead, there's going to be a blend. There's going to be, I don't agree with him that it's going to be like an overnight flip of the switch thing. It's going to happen gradually. But when it does happen, it's going to feel like it's sudden. But in reality, behind the scenes, it was just something that was building week after week after week after week that eventually leads to this feeling of it being a flip of a switch. And when that happens, there is not like, man, just all it takes is for you to understand how much money there is in the world and how little the crypto ecosystem is compared to all that money.
Yeah. I feel like what he said too aligns with what Marshall Hayner just said at that GAC 2026, saying we're about to see the institutional bull run, right? Which we've never seen before. So the fact that he's saying very similar talk track, that's aligned with that, and there's many others, man. I'm excited for the rest of this year to play out, and then even going into 2027, I feel like we're about to see some fireworks, especially if this Clarity Act gets passed. Especially.
Yep. And on top of that, now you've built the digital skills, bro, to build a bigger cash cushion so that way you can allocate more capital into these discounted prices. Last clip that I have from this gentleman here. Again, shout out to Coinage for this interview. I always want to give credit where credit's due. He just reiterates this notion of how you cannot risk not having crypto exposure. And so again, coming from a gentleman who just signed a deal with Franklin Templeton, I feel like this is a very big wake-up call to any nervous retail investor right now listening in. Now is also our moment to position ourselves, not financial advice, of course. Assess your own personal risk properly, understand tokenomics, make sure that you're investing in projects that hopefully have longevity in this space. But now is an opportune moment to just really make sure that you're embedding yourself in the right communities with the right education and the right information, so that way you can stay competitive in this ever evolving landscape, right? So listen to what he says here about how it's very risky to not have crypto exposure.
Look, if you're trying to trade this market short term, I can't tell you how to do it. It's very, very volatile. But when you step back and you look at the amazing things that are happening from a fundamental perspective, the de-risking, the regulatory de-risking around the globe, and the fact that every institution I know is trying to figure out how to get into this space, I think it's a very, very interesting, and you can't ignore this asset class. You have to have a strategy.
Yeah, and certainly, obviously,
he said every
institution.
I'm glad you took the words out of my mouth. Every institution he knows is trying to figure out how to build a strategy to get into this space.
That's so wild, bro. That is extremely bullish right there, bro.
And the crazier part is realizing that hasn't happened yet. Like they haven't come in yet. They're prepping to.
Literally, the foundation is being laid. The innovation programs are being ran. Testing is being done. Testnets.
I know your family is up now, so I don't know if you still wanted to go over the Metallicus piece, or if you just wanted me to dive into the Canton spiel real quick and sort of all the fundamentals that came about over the last week, and then we can cut it.
Yeah, maybe because it's really loud right now. Maybe we can just go into the Canton, and I can do it at the end if it's a little quiet. It's like super windy, and my kids are in the backyard trying to pick up a bunch of stuff that's flying away. We got like 40-mile-per-hour winds right now going over here.
All right, cool. We'll roll into it. All right, cool. So, let me just make sure. Alrighty, so real fast, I don't want anybody to think that I'm shilling Canton. So first off, before we dive into these fundamental pieces, just know that I don't encourage anybody to invest in any digital assets. To each his own, do your own research, invest in your own thesis and positions and perspectives and all these opinions that people have. I'm just at the end of the day here to show you guys the research, and the research is in the pudding, and that's that Canton has had an astronomical last couple of days alone to end Q2, or excuse me, to end Q1, and then rolling into Q2. We've just seen some very, very important and groundbreaking fundamental announcements. And so I want to share those with you guys today in this portion of the video breakdown, starting off with the post directly from Sygnum Bank, who is a very large participant in the ecosystem. They posted about Canton, where it says, within blockchains, many people conflate privacy with anonymity. And I want to read all these fundamental pieces for you guys today, just give you a perspective of what's happened in the last week alone. This is not what's happened over the past couple of months, which has been even more astronomical. This is just within the last week worth of announcements, which are all just huge. And so show the scale and the breadth and the depth of Canton and what it is that they're building. I'm a firm believer of Canton. I'm diversified. It's one of the many assets that I hold in my portfolio, so I'll let that be known. I'm not like a freaking Canton maxi. I don't think it's the only one that's going to survive. I think we're going to operate in a multi-chain ecosystem in the future, but I do think that Canton will play a very big role in that future digital infrastructure. So showing you guys some of those developments, it says here. In this episode of Sygnum's The Crypto Explorer podcast, our host Aliyah Das speaks with Melvis, the executive director of Canton Foundation, who explains why this distinction is critical for regulated institutions. He outlines why anonymity alone is insufficient in financial markets and why privacy on a need-to-know basis with auditability and selective disclosure is essential for compliance, governance, and trust. So let's just listen, starting it off here with this piece from Melvis.
So you're talking about basically a sort of flexible layer of privacy, which, I mean, the thing is you have privacy networks that do exist, but they kind of almost have a bit of a bad reputation for enabling, dangerous transactions and dangerous actors to kind of get away with what they need to do. But yeah, go ahead.
and with that, within blockchains, many people conflate privacy with anonymity, which is, I think, is what you're talking about. In a sense that with anonymity, there's a blockchain where inputs go in, there's a black box, and then there's an output. No, you do not really just accept that the algorithms and the code works correctly for the output to come out to be what it's supposed to be, and you don't see who's behind it. But then within Canton, the type of privacy that we are talking about is privacy on a need-to-know basis. So with this, if you are a large institution or someone who's heavily regulated, you need to be able to audit the data. You need to be able to have selective disclosures around what people need to see, when they need to see it, and how they get to see it. So that's the biggest difference in terms of the level of privacy or the type of privacy that we're talking about within Canton.
So starting off with the privacy note here, I want to take your attention over to a company, an organization that most people on this planet probably know about. And if not, then, I wouldn't know why, but probably even have a Visa card in your wallet or in your purse. And so this is Rubal Birdwhacker. His name is very interesting, but he is the global head of growth at Visa. And he was just at Blockworks DAS New York City 2026, and he explained how Canton Network's privacy-preserving blockchain plus Visa as a super validator can remove key roadblocks for regulated institutions, which just goes hand in hand with what Melvis just said, and this is support directly from Visa. So, you have all these retail opinions going back and forth on social media about Canton, and then you have a major payment provider like Visa publicly willing and, making content on Canton. Is just such a huge, bright light where it's like, hello, this is a chain that you should be paying attention to, considering that Visa is who they are. And they're not just going to stand by some random chain that they don't believe in and haven't done their research on. They're obviously, of course, a super validator on Canton, and they believe in Canton for some specific reason, right? Listen to what this gentleman here has to say.
I think the single most important takeaway from our perspective is we believe in order for stablecoins in payments to find real institutional adoption, privacy will have to become an important tenet and a critical component. And I hope that sticks with the audience. We talked about that in context of Canton being a privacy-first L1 chain. and the goal that Visa is going to have, being a super validator in helping navigate the governance of the Canton network. We truly believe we can be an incrementally positive, trusted bridge between capital markets, where Canton is very, very highly adopted today, and payments, where we have an enormous amount of expertise. We just have an enormous amount of thoughtful assets and expertise in safety, security, reliability, in what really becomes the operational resilience. And we believe we can bring a lot of that expertise to the Canton network as a super validator in helping them govern this better.
So,
bro,
yeah,
I just remember when I came into crypto 2023, and I was hearing all the different, talk track spiels about, be your own bank, not your keys, not your crypto, all those sayings, right? One of the sayings was transparency. We should be able to see everything on chain. I feel like, bro, when you come into the crypto game, they literally just shape people's minds to not look in certain places by putting just falsehoods in their mind, and Canton's biggest thing is privacy, and they're winning. It's not like this is a project that's not winning, that doesn't have any super validators yet, doesn't have big connections, big relationships like Visa, right? But the fact is that they do, and privacy does matter, and privacy is here to stay. It's really wild how that works. And I know a lot of other people can speak on that too, because it's a lot of that topic and talking point comes up a lot in different spaces, whether it's on X, TikTok, or somebody just talking about it on YouTube. So yeah,
I couldn't agree more, bro. All right, so check this out. I want to get into this post from this lady here, Aurelie Dilemas. Now, real quick, this completely blew my mind, right? So for those of you all who don't know who this lady was and who is now, she used to work at Ripple for 5 years, 10 months as the RippleX VP. Okay. And now she works full-time as the head of network growth in the APAC region at Digital Asset. Now, check this out and just think about what it is that we share here at CyberX. Do you think that this lady would just follow any person? You think she just goes out of her way and follows random people on the internet?
No, bro, absolutely not. Let's
okay,
get
well,
real.
Aurelie, who used to work at Ripple and now works at Digital Asset, just the other day followed me on LinkedIn. You guys can see here that I have a connection. I actually now have the ability to message her because she followed me back. Which is crazy. But not only does she follow me on LinkedIn, she also follows the head of our CyberX research, Frank, who you guys can see right here, runs the CyberX Research Labs X profile as well. So that to me screams loudly that somewhere down the pipeline, she's seen the research that we commit ourselves to and understands that it's not fugazi hype research, and isn't just the type of person that would just go out and follow any random content creator, which is just mind-blowing to me. So I want to just take a second and listen to something that was said on stage at a recent event that Aurelie was sitting at. She was sitting next to the CEO of Wallet Connect, Jess Holgrave, I believe her name is, if I'm not mistaken. And word for word, the CEO of Wallet Connect, sitting next to Aurelie, now working at Digital Asset, specifically said that Fireblocks, HexTrust, BitGo, Anchorage, and it's at these places that major institutions, hedge funds, and banks are storing their digital assets. And it's where we're hearing a lot from, and that those customers are asking, when are you going to do Canton Network? Because that's what we're going to be wanting to use over the coming years, which is crazy that she said that on stage. So just take a second and listen to that little tiny spiel here.
Yeah, so for us, I think this is extremely exciting. Wallet Connect at its heart works with all different chain ecosystems, but a few times a year, we really prioritize chains that we think are going to be really instrumental in changing the landscape. What that means is that we do work to make sure that Wallet Connect works seamlessly, that it's really easy for our wallets and custodians and easy for app builders to integrate with that chain. And we see Canton really as one of the most exciting chains in this space at the moment. The work that they're doing on the institutional side, side around tokenized real world assets, equities is incredibly exciting. Not to mention, of course, kind of the privacy aspect, which really delivers something very different to the ecosystem. So this integration for us is really exciting. As Aurélie mentioned, last year we launched a program called Custodian Certified. So where Wallet Connect historically has had a very broad network of retail wallets, and also over the last few years we've welcomed more and more institutional and custodian wallets to the network. People like Fireblocks, Hextrust, BitGo, Anchorage, and it's at these places that major institutions, hedge funds, and banks are storing their digital assets. And we were hearing a lot from those customers, when are you going to do Canton? Because that's what we were going to want to be using over the coming years. So that's really the origin of today's announcement, and I'm very excited about it.
She said, that's what we're going to be using in the coming years.
Yeah, man. You know, I pay attention to details, so that one definitely rang the bell for me. I thought that I'd throw that clip up in there. You know, not financial advice, of course, but if you got Hex, you got Fireblocks, you got Anchorage, you got BitGo, and all these institutional clients talking directly to the Wallet Connect CEO about, hey, hello, knock, knock, knock. When are you going to integrate Wallet Connect with Canton? Because that's what we want to use. I feel like that's a pretty substantial announcement there.
And isn't BitGo a super validator as well on Canton Network, if I'm not mistaken?
I'm pretty sure.
So that's like double confirmation, you know?
All right, so rolling over into just the recent announcements, just to show you guys how Canton ended Q2, because all of these announcements are from within the last week, and then now rolling into, excuse me, I keep saying ended Q2, ended Q1, and now rolling into Q2, how they've started up just the past couple of days as we're heading into April, and then how they ended March. So Transact, this is from March 31st, 2026. Transact enables fiat access to Canton Network, expanding institutional access to on-chain finance. And I'm just going to read thoroughly through some of these pieces. Transact, a regulated payments infrastructure provider, today announced its integration with the Canton Network, the only public permissionless blockchain with configurable privacy built for institutional finance. The integration expands fiat-based access to the Canton Network's native utility token, Canton Coin, where users and institutions can now acquire Canton Coin directly through Transact integrated wallets and applications using credit cards, bank transfers, and a wide range of local payment methods. By providing seamless on-ramps to the network, the integration removes one of the last friction points between TradFi and Canton's rapidly expanding ecosystem. So this was just nice to see that friction points for institutions to actually adopt these digital assets are being removed. Now, that's not the only, of course, announcement in regards to this. We had BitGo, just announced as well, March 30th, wrapping up this week. Canton Coin is now available on BitGo. So that is pretty crazy. Again, institutions now having access to this digital asset ecosystem. We also had Circle joining the Canton Network as a super validator on March 31st. The theme continues. We had Keiko make this huge announcement. This was probably one of the biggest announcements so far because it is a first of its kind. March 31st, 2026. So all of these things happening in the same day. The S&P Dow Jones Indices, the world's leading index provider, and Keiko, the global leader in digital asset market data and data infrastructure, today announced the tokenization of the iBox US Treasury Index on the blockchain. This marks the first time a major index provider has made a financial benchmark available as a native digital asset with embedded index data distribution, licensing, and permissioning. Through this collaboration among S&P Dow Jones Indices and Keiko, the iBox US Treasuries Index has been tokenized on the Canton Network, a privacy-preserving blockchain designed again for institutional finance. So that was yet again another major announcement to end this week. Now rolling into April 1st, we had this announcement from Nuity. Nuity, a financial technology company transforming how small businesses access capital, today announced it has selected the Canton Network to support on-chain distribution of small business credit, creating one of the first, so that is another first of its kind announcement, creating one of the first dedicated on-chain markets for small business loans. The announcement follows Nuity's recent $11 million strategic investment led by CMT Digital, secured to scale AI-driven origination and to connect small businesses, credits with blockchain-enabled capital markets, having already helped more than 125,000 businesses secure $12 billion in affordable capital. Nuity's choice of Canton, the only public permission blockchain purpose-built for institutional finance, is a decisive step towards making historically illiquid small business debt discoverable and tradable through on-chain compliant infrastructure. This integration will expand access to capital for America's 33 million small businesses, which is just a huge granular announcement. What I like about this announcement is just coming over here and looking a little bit into Nuity. You come down here to a recent milestone that they achieved in 2025, and it says Nuity joins. Oh, let me just read this whole thing. It says, in addition to becoming the #1 small business association, I'm pretty sure, small business application loan facilitator, and appearing in America's Bankers 25 people who will change the banking industry in 2025, they selected Nuity for its 596 spots on the Incorporated 5,000 list in 2025. The list out of 5,000 is the most prestigious ranking of the fastest growing private companies in America. And they chose Canton to do this small business loan on a blockchain with, right? So that to me just speaks loudly of the credibility that not only organizations like this have, but they're choosing Canton as their layer to, issue these loans on, which is pretty crazy to me. More recently, we had this announcement from HiFi, I believe it's called, or HiFi Bridge. I'm not sure I pronounced this one here, but we come up here. This was actually just announced today. HiFi and Canton bring private on-chain settlement for institutions and payments. Reading a little bit into this, it just says HiFi abstracts Canton's settlement layer entirely. You don't need to write DAML contracts, run a validator node, or manage on-chain states. Payments routes through Canton the same way that they route through any other network HiFi supports, through a single API. If your use case requires confidential payment flows, you can now route through infrastructure built for it without changing your integration. Programmable treasuries define sweep rules, payout conditions, and approval workflows where Canton enforces them at the smart contract level and keeps your cash flow and data confidential. HiFi handles the fiat disbursement, private cross-border settlement across border flows on-chain without exposing counterparties, amounts, or routing to the rest of the network. HiFi connects on-chain settlement to bank transfers and fiat payouts. You also have repo and collateral settlement, where Canton supports atomic delivery versus payment, eliminating principal risk and the securities leg and the cash leg settlement together, or not at all. With each side visible only to its counterparty, HiFi connects the cash side of these network flows to fiat rails and stablecoin liquidity. So the cash leg is funded and the settlement actually completes. So that was just, again, another major announcement. Last but not least, we have this one. This is just from a couple of days ago, and it says Particular issues the first ever. So now this is the third first of its kind announcement. And the reason why I want you guys to pay to these vocabulary words is this is the third announcement where it said first of its kind. So think about all these other layer ones that have been around for years, 10 years, 15 years in some cases. And instead of choosing those layer ones for the first of its kind, it's choosing Canton. That speaks loudly to me because all these companies have known that all these other layer ones exist. And instead of choosing all these other companies that all these bullish moon boys have been hyping up over the years and this and that, they're just choosing Canton for the first time ever to build these granular products on, which just, again, you don't see these companies and these organizations going back and forth about blah, 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 blah on Twitter and which layer one is the best and this and that. They're just choosing Canton. Drop the mic.
Yeah, drop the mic, bro. This is massive for Canton. Absolutely massive.
And this is all within the last week, mind you, alone. This is what, like the fifth announcement. So Particular issues the first ever public trading rating on Canton Network and assigns a pre-issuance B+ to the Keros Credit Enhanced High Yield Digital Loan Note token. And this was again in March 2026. The Horizon Group announced this collaboration with T-Rise Group Corporation, a specialized tokenization provider for the Canton Network, to expand its B2B lending offering into digital markets through the launch of the KAI 18-1 token. So yeah, just again, massive announcements across the board involving Canton. not financial advice. There's been some just granular things taking shape that I feel like because of the noise in crypto, because of the sentiment, people just might not be paying attention to. But Canton is, again, one of those layer ones, one of those projects that even in the bear market and this pullback, surprisingly has still been holding up price relatively well, while at the same time building infrastructure, reliability, partnerships, new validators, and just growing exponentially. So that's my spiel for today. I'm going to let Aqua get back to his family. I'm going to go enjoy the rest of my weekend. Many blessings to you guys listening into this call. If you have been with us since the beginning of today's call, again, I encourage you all to take just action. Really go out there, believe in yourselves, understand that you are the asset at the end of the day, and that your mindset matters. Your productivity matters, especially in an environment like this, where everybody's fearful, the market's down. How you position yourself and you position your mindset and the education that you gather and how you implement that education on a day-to-day basis matters. Remember that data is the new oil. Data is the new currency. He who has the data, or she who has the data, is the one who actually prospers. And here at CyberX, we have the data, we have the institutional software, we have the institutional research, we have the proper technical analysis, we have the community to back and support members that want to come in and believe in themselves to do better. Tap in with us. If you guys want to access our community, we'd love to have you try out our services for a month. We'd love to have you in the Discord, hopping in on private Zoom calls, tapping into the research, watching all the educational material, locking in with our institutional software. Head over to cyberxtrading.com. We'd love to have you on the team. With that being said, blessings to you guys. Aqua, as always, man, it was a pleasure. And I'll see you next week, bro.
Yeah, for sure. Much love to everybody.
You guys take it easy.